AM 95.9 FM, streaming worldwide at KELPradio.com.
915 Talk is a production of Desert Voice Media. You can visit desertvoice.media to learn more.
915 TALK.
The world is looking at El Paso.
What will we say to the world? From the KELP studio in El Paso, this is 915 Talk.
And now your host.
Oh, episode 282. Good afternoon, beautiful citizens of the borderland. This is 915 Talk, and I'm your host, Andy Frecka. And today we are yet again broadcasting from the heart of the world's largest borderplex. We're here at the KELP studio in El Paso. And today we have the incredibly distinct privilege of having Mac Daddy Del Norte on the board. Mac Daddy, how you doing this afternoon?
Andy, I'm doing pretty good. How about yourself?
Oh, man. Oh, I wish I could describe the wonder and joy of this educational journey that we've embarked upon, as each and every weekday afternoon we learn to love our city and love our neighbors and give God all the glory. But very sadly, my vocabulary is painfully poverty-stricken. I'm unable to describe all the wonder that we experience each day.
Yes, sir.
But we continue the journey. Some people started this program not knowing what it was. It's a program that never ends. It keeps going on and on, my friend.
Yeah, definitely.
And we continue to learn. We continue to be educated.
That's right.
Oh, so Mac Daddy Del Norte, we've had some really good programs recently.
If you say so.
Yeah, no, we've
I just learned something today. You mentioned something very important. That's why I say that.
Okay.
There, you were talking to me,
I think everything I mentioned is important, but please continue.
Yeah. You were saying that sometimes what we think is very interesting to us might not be so interesting to the listener, and then sometimes we'll be getting feedback on conversations that we're like, oh, maybe that wasn't that good or whatever, and we get all this great feedback. So
we love the feedback. We love the feedback. That's why I have the KELP radio app. Just message the studio. We always love to hear from our listeners, but you like talking about music, Mac Daddy Del Norte.
Oh, yeah, definitely.
And we recently talked about music. What do I like to talk about, Mac Daddy Del Norte?
I know what you like to talk about, and that's real estate.
Oh, yeah. I do like talking about real estate. I hope our listeners enjoy listening about real estate, right?
Maybe. They probably think it's boring. Who knows? Chirp.
Mac Daddy Del Norte, come on. No, real estate's great. So we're going to be talking today about mortgages.
Okay.
Yeah. Okay. How can we afford houses?
That's a good one.
Right?
Yes.
See, suddenly your ears perked up, Mac Daddy Del Norte.
I'm just kidding. I'm just kidding.
You have 3 kids. You're thinking about your future.
Yes, sir, I am.
Right?
Yes.
So we're going to be talking about mortgages today. We have a good friend in. He's from Canopy Mortgage.
Okay. Never heard of that.
Yeah. Well, do you remember Patrick Tuttle?
I do, yes.
Oh, yeah. Patrick Tuttle of Coldwell Banker Heritage Real Estate. So he recently did that event that we were promoting.
Okay.
And I went to the event, and the Canopy Mortgage guy was there, and he was talking about how mortgages are changing, evolving, what they're like today. And I was like really interested. I said, you got to come on the radio so I can talk to you more.
That's cool.
So he's here right now.
Yes.
So he is a very special guest.
Yes, definitely.
And he's not just special because he's from Canopy Mortgage. Why else is he special?
Oh, because he is the unique expression of an endlessly creative God.
Yes, he is the unique expression of an endlessly creative God. Also born and raised here in El Paso, a true son of the borderland.
Oh, wow.
Yeah.
Makes him more special.
Yeah, absolutely. So we're going to be talking about what's going on with mortgages. I do need to do the disclaimer. Nothing in this broadcast is in any way to be construed as financial or legal advice. What we're talking about is for informational purposes only. If you're looking for some help, find a licensed professional who understands the specifics of your situation. Yes. So having said that, we're going to jump into this conversation without further ado. Let's give a very warm Borderland welcome to the one, the only, Mr. Danny Nassar. Danny, welcome.
Thank you for having me.
Oh, man. You know what? I think we just became like best friends. but I forgot to ask you the question I should always ask. Did I pronounce your last name correctly?
Nassar.
Nassar.
Uh-huh.
Okay, so I was pretty close.
You got it.
Not too bad. Danny Nassar of Canopy Mortgage. Super good to have you here. We're going to open up the phone lines today.
Okay.
And if people want to call in, if they have mortgage-related questions, mortgage-related, we'll do our best to have a little conversation with them. The number's 915-779-0016. So maybe let's start off with how has the world of mortgages changed over the years? And maybe just a brief history of mortgages starting in the era of 2006, which turned into a financial meltdown.
Yeah, 2006 to 2008. That was a tough time.
Mm-hmm.
A lot of people. There was a lot of mortgage fraud. Yeah, it caused a global recession. Back then, you could buy a house if you had a heartbeat. And they would just afford no down payment.
Right.
It was so easy. There was a lot of foreclosures. It was pretty tough to survive that time, but we did. Thank God for that. And a lot of regulation afterwards for good reason. So back then, when you bought a house, they didn't really ask for much. Right now, they ask for everything. Almost your blood type even. So so when I do loans for people, it is frustrating. It's not easy, but at the end of the day, it is worth it. We ask for a lot of stuff for good reason, because we don't want another global recession. It didn't just affect the U.S. It affected the whole world.
Right.
So
yes. So back then they were just handing I don't want to call it free money, because it ended up not being free, because people kind of lost everything. A lot of people did, and it created shockwaves that affected even those folks who were kind of in a stable situation. It was that big, but we made it through that, and you say that right now a lot more information is required to get those loans. What does that look like?
So, back then they're starting to come back now. These no document loans. I don't highly recommend them, but it's going to come at a higher down payment than back in the day. So back in the day, prior to the crash, you can buy a home, no document verification at a 600 credit score, with no down payment. Okay,
so 600 credit score.
Not now. Yeah, back then.
Yeah, back then. Yeah. Okay, so this is 20 years ago. You could 600 credit score, which means probably you've missed payments in the past.
It's not the best, no. Yeah, it's not the best credit rating.
Right.
And you don't have to verify income.
Oh, wow.
Yeah, at no down payment. So those banks are no longer. They've all shut down. Right. So nowadays, there are programs like that. It's not as easy, but they do exist. And it's going to be more income verification, more documentation that they have to provide for good reason. But it's not difficult to qualify for it. I think for the consumer, it's difficult for them because just getting the documentation, I think, if you were to ask me, my biggest obstacle with my job is getting the documents from the borrowers, because it is a lot. I just recently bought a home, and I was on that side of the table.
Yeah.
And it was a lot.
So what are some of those documents?
If you're self-employed, you would have to provide personal tax returns, all pages. And you have to verify if you owe any money to the IRS. And if you do, then you have to get payment plans from the IRS. So you provide one document and we review it, and based off of what comes out, it could require extra documents depending on your situation.
Sure.
If you're a W-2 employee, they would just require W-2s. So it could be easy, but a lot of times it's not, because I've never done a loan in 22 years that's exactly the same.
Oh.
Every single one's different. Even though you're requiring most of the same documents, which is W-2s and tax returns, it's never the same. So mostly W-2s, tax returns, pay stubs, 30 to 60 days of bank statements. And then once those come in, then we review it, and that's when the underwriting process starts. And when things get tedious, like bank statements. If somebody had a large cash deposit that was not normal to their behavior, you would have to verify it.
Yeah.
You can't have cash deposits. So
Why is that?
money laundering laws.
Okay.
So you can't be a drug dealer.
Right. Oh, right.
Yeah, you can't just be depositing large cash.
I
You
wasn't
have-
even.
Yeah, you have to verify it.
Okay, I wasn't even thinking that crazy. I was thinking making sure that the money in your account is something you earned and not something from grandpa.
Yeah, I mean, you ever seen the Ozarks? So it's like a lot of money laundering people out there. And I always ask that question, like, why is this law in place? And one buyer that I had, they hit me with that. So I understood why they're requiring this documentation. So somebody had owned a jewelry business, and he had sold about $50,000 of illegal diamonds, and he had deposited the money, and he was under a federal investigation.
Oh, wow.
So that's why you can't have large cash deposits.
Right.
There's a lot of criminal activity behind it.
Yeah. Okay. Wow. I didn't expect it to turn that dark so suddenly, Daddy.
It can be a pretty dark industry. Yeah, I have a lot of I can do a lot of these shows and tell you all sorts of crazy stories. Yeah.
Well, I think that's one of those things when you start to go through people's credit history and all of that, you really get to know them.
Sometimes a little too much. And you end up getting in between marriages. So it's sad sometimes. But, Texas is a community property state. If you're in the middle of a separation, Texas does not recognize separation. You're either married or you're divorced. So if you're trying to buy a house and you don't want your spouse on the loan with you, not on the title with you, good luck. It's not going to happen. They're going to have to go on title.
Right. Okay. I think on the flip side, people who are maybe having some kind of struggle, whether that be personally or financially, can be kind of embarrassed to go through that approval process. What would you say to those folks?
It is embarrassing, and they withhold a lot of information. I was doing a loan for somebody. It was 2 months in the making, and we're about to close. And in the end, we figured out that she was married, even though she had a partner, and she was technically married, quote unquote, and lived with that partner for 20 years.
She was actually married to someone else
from 20 years ago, and they never got divorced.
Could it be that she had just not thought about that?
She thought about it.
I
don't think you'd forget that.
Well, I mean, 20 years. I mean, maybe in her mind it was over.
It was over, and she didn't want to proceed forward with the transaction because we would have to put him on the title, and she was so terrified of him because he was a violent guy. So if he had found out, he would know where she lives.
Right.
So they backed out and they canceled the contract.
Wow. Yeah, that's what a difficult kind of story.
It's sad.
Yeah.
Yeah.
Yeah. Well, okay. So things have tightened up since 2006, and that's good. What are some of the opportunities you see right now for someone who's looking to buy a house? Maybe they're struggling to put together a down payment.
So that 600 credit score, no income verification, no down payment doesn't exist anymore. But
praise the Lord.
Praise the Lord. Yes, we don't want that. So there is down payment assistance. We have our own in-house down payment assistance at a 600 credit score minimum.
Okay. Wow.
But you have to verify your income. The terms are not the best. The rate and the terms and the cost is not the best.
What would the difference be?
Between that and no down payment, or putting your own down payment?
Right.
So you're looking at, if you had your own down payment, our rates right now are ranging between 5.5 to 5.99.
Okay.
We're still with Canopy Mortgage. We're a Utah-based company. We're on average about 0.5% to a full percent lower than the national average as far as our rates. Now, if you did the 600 credit score, no down payment in-house, you're looking at a rate of probably 7.125 to 7.5. Mm-hmm. If you can boost it up to a 620, which we do free credit consultation, so I can, if I were to pull your credit, Andy, I can take a look at it and run a simulator and tell you precisely what to do to get the scores up, rather than having you go to a credit repair agency and pay them monthly. Mm-hmm. And it's a quick fix. Mm-hmm. And I'm doing that with a client right now. He's actually under contract, and we're in the process of doing it. Mm. That's a little scary, but we're doing it. Okay. So, and if you were to follow those instructions, you can get your credit scores up within 5 days.
Oh, wow. Okay.
And we can do what's called rapid rescores. Instead of waiting 30 days to reflect on your credit report, which typically that's how long it takes creditors to report to the bureaus. Mm-hmm. Like if you were to pay down a Capital One card, the new balance reflects just once a month. So it takes about 30 days to report. We can do a rapid rescore, which takes about 5 days. Mm-hmm. So if I can get you, say, from a 600 to a 620, back to the down payment assistance, the state-sponsored down payment assistance program is the best. And I think people need to utilize it, because if they don't, they're leaving money on the table.
Right. So it might be obvious, but the higher the credit score, the lower the interest you're going to pay. And so if there's a way to repair or improve your credit score, you're going to save on your monthly.
Yes and no. So on the down payment assistance program, the 620, the rate is determined by the program, the state sponsor. Mm-hmm. So whether you have a 620 credit score or an 800, you're going to get the same rate. Okay. So which is nice. And the down payment, it goes either from 2, 3, 4, or 5% of the sales price. And that money can be utilized towards down payment and or closing costs. Okay. So if you're in a situation to where you're trying to negotiate for the sellers to pay for closing costs and they say no, you can use a portion of that money to pay for it. So there is a way to still get into a house with very little to almost no money out of pocket. Mm-hmm. You're going to still have your upfront costs. So if you want to make an offer on a home, you have to put earnest money. An earnest money deposit can range between 0.5% to a full percent of the purchase price. You typically want to pay for an inspection report. Mm-hmm. Make sure you're not buying a home that's got all sorts of issues. So that can be between $300 to $400, depending on where you are. And then there's the appraisal report, which is about $700. So there's upfront cost. Even if you're getting into a no down payment loan, you still want to have hopefully at least about $4,000 or more in checking and savings or in your 401k. Mm-hmm. So you could withdraw money out of your 401k without a penalty, because real estate is still considered an investment, just like stocks. So there's no penalties to take out for buying real estate. Mm-hmm. So if you have a 401k but no money in the bank, you are a very good candidate to buy a house. Okay. Yeah. And people don't think of that, but I think you should, because your home could be your 401k in the future.
Sure. Okay. All right. So if you're just joining us with Danny Nassar, he's with Canopy Mortgage here in El Paso. Phone lines are open if you have any mortgage-related questions, 915-779-0016. We do need to take a break. Before we go into the break, this is your daily reminder that 915 Talk is a production of Desert Voice Media. The website is just that, desertvoice.media, and you can go there and click on that 915 Talk link and listen to this or any previous 915 Talk conversation. It truly is the highlight of my day. Oh, it's the highlight of my work day. I was recently corrected on that. The highlight of my day is when I go home and see my wife and kids. But the highlight of my work day is 915 Talk. So if you go to desertvoice.media, you can click on that 915 Talk link and listen to this or any previous conversation. I'm enjoying this educational journey as we learn to love our city, love our neighbors, and give God all the glory. We're going to go into a break. Do not touch that dial.
We'll be right back. Don't touch that dial.
915 Talk is listener supported and is a production of Desert Voice Media. That's right. It's people just like you who make this program possible. Together with Desert Voice, you can learn how to better serve our neighbors and pray for our community. To become a Desert Voice Media partner, you can visit desertvoice.media. That's right. That's the website, desertvoice.media. Take a look and join us today in reaching our borderland for Christ.
Thank you for listening to KELP Radio. I am Pastor Drew Cook from Coronado Baptist Church in West El Paso. Join us every weekday at 11:30 a.m. for 2021 Radio. In John chapter 20, verse 21, Jesus says, "As the Father has sent me, even so I am sending you." Our prayer is that as you hear God's word, you would be strengthened, anchored, equipped, and sent to fulfill the ministry that God has given you to do.
Tune in to KELP Radio Monday through Friday at 11:30 a.m. for 2021 Radio from Coronado Baptist Church.
This is Pastor Steve Castrita. I'd like to extend the invitation for you to join us in service every Saturday at 5 p.m. at Redeeming Grace Church, El Paso. We are located at 2400 George Dieter inside Iglesia Philadelphia. We're a young church on the east side of El Paso with no smoke, no lasers, and no gimmicks, just the uncompromising Word of God and a call to win the 915 for Jesus Christ. We'd love to meet you and your family. God bless you, and thank you for listening to KELP.
915.
Testify.
I was going down a really wrong path. I was in a path that I should never have been a part of, but I was. God sent me to a private Christian school where I pushed against it and I didn't want anything to do with it because religion to me was just something you did because you had to do it, not because you chose to do it. And I had never understood it before. But once I started attending church, the pastors told me that there was a God who wanted me. He sent his son to die for me. No one had ever put their life on the line to save me. And I found out that there was a Jesus out there who was willing to do that for me even before I was ever thought of. I grew up without a father, with a mother who worked all the time. I was raised by my grandparents. I was called the redheaded stepchild. It was very difficult for me to feel like I belonged anywhere. And the only time I ever felt worth anything was when Jesus came into my life. My name's Stephanie Gastrita. I was born and raised in El Paso, Texas. If he can do it for me, he can do it for you.
And they overcame him by the blood of the Lamb
And by the word of their testimony.
desertvoice.media.
We're back. You're listening to 915 Talk.
We are back, and you are listening to 915 Talk. Today we're with Danny and Nassar of Canopy Mortgage here in El Paso. Phone lines are open, 915-779-0016 if you have any mortgage-related questions. Before went into the break, Danny, we were talking about down payment assistance, but you also mentioned off-air something about a tax credit.
Yes. So that's you want to take advantage of that because it's only for first-time home buyers. If you don't get on the program, you lose it. Mm-hmm. So you have to verify 3 years of tax returns, and the reason for that is tax returns prove whether or not you've owned a home in the last 3 years. So a first-time home buyer is not someone who's never bought a house. It's someone who has not owned a home in the last 3 years.
Okay.
So what this program does, it increases your purchasing power by on average about $20,000 to $30,000. Mm-hmm. So, for example, if a mortgage company qualified you without the program for, say, maximum $200,000, on this program, you would more than likely qualify. If you qualify for it, it would approve you for up to around $225,000 to $230,000. And the way it works is as long as you live in the house. So a mortgage term is typically 30 years. You can do 15 years, but it's typically 30 years. The program is for first-time homebuyers for a primary residence. You have to live in the house. You cannot rent it, and you cannot have sold it. Mm-hmm. So as long as you're living in the house and paying interest on the loan, you're going to get a 15% tax not a tax break from the IRS, but an actual dollar-for-dollar tax credit. So this is not like you claiming children on your tax returns and getting a deduction. Yeah. There's a dollar-for-dollar tax credit. So, I don't have my calculator on me, but basically 15% of interest on a home in the $200,000 range is going to average between $2,000 to $3,000 every year.
And you'll get that as a credit.
Every single year for 30 years.
Okay.
Now, keep in mind, though, the first 15 years when you're paying on your mortgage, the first 15 years you're paying mostly interest. Mm-hmm. The tail end of the 15 years you're paying mostly principal. So the amount that you're going to receive per year is going to go down, but it's still going to be pretty substantial. It's tens of thousands of dollars.
Wow. Okay. I want to dive deeper into that, but we do have a phone call. Kathy's on the phone right now. Kathy, how you doing this afternoon? Kathy, good afternoon.
Hi, yes. Can you hear me?
Yes. How you doing?
I'm doing good, sir. I have a question about a mortgage that I have.
Okay.
Okay, it's not my first home. It's a second home. It's a vacation home in Ruidoso. Mm-hmm. And I bought it last year. My interest rate was kind of high. It was 7.87%, and I've already paid $1,000 into the principal of the house. So I have about 2/3 of the property, mortgage left. And I'm thinking, should I just keep on paying additional principal like I'm doing now, or should I try to refinance at some point, or what should I do? I mean, I don't know. I really don't know what to do. I'm thinking if I keep going the way I'm going right now, I could probably have it paid off in 7 years.
Sure. Danny, what would you say to that, particularly with what she said at the end, that she could pay it off in 7 years?
That's a great question. I would continue making those payments to pay it off as quickly as possible, for sure, because I'm a mortgage guy, but I hate to say this. A mortgage is not a great deal, because if you look at the amount of interest that you pay for 30 years, it's more than double that price of the house.
Sure.
So what you're doing right now is awesome. Pay it off as quickly as you can. I don't think it's a bad idea to refinance, but you said it's a second home. You're at 7.875.
Yeah.
A second home right now on the interest rate is the same typically as an investment property. So you're probably going to maybe be in the sixes. You never want to refinance unless you drop your rate by at least a full percentage point or more.
Mm-hmm. Okay. Okay. All right. So it's going to definitely be higher since it's an investment or a second home. Yeah. Okay.
And it depends also on the balance. May I ask what the balance is?
Okay. Yeah. Right now it's 188. It was. I started off at 287. It's 188 right now. And my credit score is about 820.
If you're at 188, it's not going to save you that much. So if you were like $300,000, $400,000, $500,000, refinancing would save you a couple $100 a month. But at 188, it may not be worth it because there are costs to refinancing. So a $188,000 loan, you're looking at a closing cost of, well, I mean, New Mexico, the taxes are low, which is good. So your escrow is going to be pretty low. But your actual cost is probably going to be maybe $5,000. So, I mean, and if you refinance and you dropped it by a full point, you might save yourself maybe $60, $70 a month. So typically, what you want to do is you want to calculate 7 years times 12. So you're looking at 84 months times 70. As long as the savings is more than the cost, it's worth it.
So that's if you look at 84 times 70, that's a little under $6,000. And so essentially that would be what I'm hearing you say, Danny, is because of the closing costs, you might save $800 over 7 years, but that's questionable.
Right.
Okay. That's not good.
Right.
Yeah.
Okay.
Now, if you decide on not making extra payments anymore, then definitely consider it.
Okay.
If you want to pay it off in 15 to 30 years, then I would refinance. But I would wait a little bit. I think we can do a little bit better right now on rates.
Okay. All right. I appreciate that. Thank you very much.
Of course,
Kathy, thank you for your call. Enjoy the rest of your day.
Okay, you too. All right, bye-bye.
Bye.
Bye.
And we're back. Today we're with Danny Nassar of Canopy Mortgage. Appreciate that call from Kathy. Phone lines are open, 915-779-0016. If people are listening right now, Danny, and they don't want to get on the radio, which I don't want to say because I'm a radio guy, how can they get in touch with you?
Please call me. So Danny Nassar, again, with Canopy Mortgage, the branch manager with the company for 22 years in the business. My cell phone or my office number is area code 915-221-1580.
915-221-1580. All right. So that's Canopy Mortgage. And you and I had a conversation even about my situation with my house. Really appreciate your input on that. I think we'll continue that conversation. Yeah. But again, today we're with Danny Nassar of Canopy Mortgage. Really enjoying this conversation and sort of nerding out about some of the details, but they aren't details because those little amounts of money turn into big amounts over the years. So we will continue this conversation. But right now we have Charlie One on the phone. Charlie One, what are you seeing out on the roads this afternoon?
Well, we still have a trouble spot right now. And I'm talking about I-10 East and Litrevito. First, we had a crash there about maybe an hour ago. We had a crash there. They cleared it about maybe 30 minutes ago. However, you're still bumper to bumper there. The reason is that the right lane has been closed all day for construction, taking away that right lane. And when they do that, you take away the right lane, that compacts the other lanes. So I-10 East and Litrevito starts at about maybe Lomaland, and then you move into that slow-moving traffic, and it's just bumper to bumper till you get past the Litrevito area and almost to the Zaragoza area. So I-10 East Litrevito, heavily congested. Then we have a crash in Montwood and Bay City, have a wreck there, so caution there. Andy, back to you.
Charlie One, this afternoon we have Danny Nassar with us. He's with Canopy Mortgage, and he was talking about tax credit and down payment assistance and all these kind of things that help out the hardworking people in our community. And those are all very valuable, services that he offers. But there's also a product that really provides, I would say, the fuel for our hardworking community, and that's the Borderlands Breakfast of Champions. Where would you suggest that our listeners find that so that they can have a good day of work after?
Yeah, that's after a good day of work, and you've saved people money, and you've been hardworking, and you deserve a break, and also your stomach deserves a break. Eastside Choice Meats. Now, there they have the pan that's menudo, that's homemade menudo in containers. They have it refrigerated. You take it home, put it in the refrigerator, and have whatever you want to, breakfast, lunch, dinner, whatever. A lot of people eat it at just different times of the day, but it's delicious, it's homemade, and you got to try that menudo if you have not. Pick it up there at Eastside Choice Meats, Loveland and Traywood. Andy.
Thank you, Charlie One. We'll talk soon.
Thank you.
And we're back with Danny Nassar, Canopy Mortgage. Phone lines are open, 915-779-0016. Any mortgage-related questions that call in. Before Kathy's call, actually, let's talk about Kathy's call for a moment. I appreciate what I understood just happened because she called in. She was open to some kind of refinance, and you as a mortgage guy make money off of this. And you told her no.
Yeah, I've turned down a lot of business. I'll always do the right thing. It's not the right thing to do that, honestly, because there's cost to it. You have to look at the costs. There's a lot of sharks out there. There really are. So you gotta be careful. And I advise you kind of the same thing too.
Right.
Maybe it's good to wait.
Yeah.
Because right now the feds are saying that they're holding rates steady, so they're not going to drop them because of the news. So a lot of uncertainty there.
Sure.
So but I think that they will eventually drop. I think that we're going to be in the 4s again. I don't know when. That's what I'm hoping for. But again, I would never refinance someone unless we're dropping the rate by at least a point or two.
Okay.
Now, for Kathy and her situation at 180, I think it would be worth it for her if she can drop her interest rate by 2%.
Well, especially because she's paying it off so quickly, it sounded like.
Yeah, she's paying it off so quickly. So she ended up refinancing. When you refinance, the cost you can either pay out of pocket or you can roll back into the loan. So she's paying down on her loan, After closing, it's going to tack on an additional $5,000 to $6,000 on top of her loan. So it's going to be a higher loan amount. In some cases, that's good because you're still going to be able to save money with the drop in the rate, but because of her loan amount, and it's not that much of a savings. So the higher the loan amount, the more the savings when you refinance.
Yeah, and we were kind of doing napkin math.
Yeah, we were.
Very much so, but I think that's helpful just to help her and others get a ballpark idea of how that works, and what it sounded like is she would potentially save maybe $800.
Probably.
Maybe. Over the next 7 years. And why take that risk if mortgage rates would drop significantly in the next couple of years?
Exactly.
Right. Okay. So we do have another call. It's Iram Samaniego. How are you doing this afternoon? Can you hear me? Good afternoon. Can you hear me?
Yes, I can.
Hi. How are you doing this afternoon?
I'm doing very well, thank you. Great program, by the way.
Thank you. What question do you have for us today?
So I have a question a little bit related with that lady that had called about the Ruidoso mortgage.
Mm-hmm.
And so is it a good thing, since he's been in the mortgage business for 22 years, is it a good thing to maybe buy a second house and maybe use it as a rental property and have a rental or have a mortgage, or is that maybe not the best way and because of having a mortgage?
I highly recommend doing that. So it wouldn't be considered a second home. So for Kathy, the home in Ruidoso is considered a second home because it's a vacation property. So if you bought a home on Lake Tahoe or Vegas, those are second homes, Ruidoso. What you're talking about is a rental property, which is an investment property, which I highly recommend. And the program, when you came, A House for Every Child, we were talking about, Andy came and he joined us at that seminar. We were talking about, it's called a DSCR loan, which stands for Debt Service Coverage Ratio. So what this is, this helps investors purchase real estate in a very seamless way. And I do think that right now is a great time to buy investment properties because prices have come down. And if you look historically, real estate prices, they appreciate even more, so they say, than the stock market. So I believe in purchasing real estate, and myself, I have investment properties, and I know that once they're all paid off, that's going to be my retirement. That's going to be my 401k.
Mm-hmm.
So, and if you can, I'm not sure how old you are, but if you look at whenever you want to retire, and in a situation like Kathy, if you have the means of paying off a mortgage quickly, like say in 7 years, imagine that property in Ruidoso, if she Airbnb'd it, or if she rented it out monthly, she can probably make a really good profit and live off of that. And so that debt service, that DSCR loan, what that does for you, you can buy a home as long as you have typically like a 660 credit score and above. We don't have to verify any of your income. So you don't even have to have a job. Okay, now this is not like the subprime days, like what I said earlier. This is a little bit different. You qualify for the mortgage based off of what you can rent it for versus what the mortgage payment is. So say you bought a home that's $200,000 and you want to rent it here in El Paso or anywhere. And let's say the payment on that is $1,600 a month. If you can rent it for at least 80% or more, so in some cases 50%, down to 50% of your mortgage payment, you're essentially automatically qualified. So we're using the rental income to qualify your mortgage payment, your mortgage loan. But you do have to have credit scores, hopefully in the high 600s or 700s, and a 20% down. What this allows you to do is to buy multiple properties. Because if you did the traditional way of qualifying for an investment property by verifying income, your income is only so much. you can't buy 100 houses unless you're a billion like Jeff Bezos or something. But if you're a salary employee, there's going to be a limit as to how many properties you can buy. On this program, you can buy unlimited amount of properties because we're not using your income. The only thing that's going to hold you back is that down payment. So,
does that make sense?
Yeah, great. And I guess I'd like to maybe summarize it or just tell you what I'm getting. So,
sure.
And to put more real numbers, I am 50, and I have two sons, a 13 and a 14-year-old. And so I was kind of like thinking, we just finished paying off our home, but we've had our emergency loan and or an emergency account so that if something was to happen to us. But now that we have that and I'm having a little bit extra money, it was suggested to me that, I'd go in that route and buy another house. Our credit score is, for both my wife and I, it's about 800 points. And we do have, we were considering maybe a house of 130, 150. There's not too many in that price. They're smaller and probably like in the Northeast or Lower Valley. But maybe to start off with something, less expensive, and because we only make about $55,000 a year. But it sounds like a great thing to do from what you're saying.
Yeah, I highly recommend it. Yeah.
Okay.
I think that was the best decisions I've made financially for myself were the properties that I purchased. So I ended up purchasing 3 in Austin when home prices in Austin were low. And look what happened to Austin. Now and I think El Paso is there. I think people are coming to El Paso. They love El Paso. They're moving here. They're investing here. Look at the home prices in El Paso, how much they've gone up.
Mm-hmm.
So I definitely think that El Paso is a great place to invest.
So with that type of loan that you're talking, the
DSCR.
So would you even consider then maybe buying 2 properties instead of 1? Because I was just thinking, you start with 1 and then eventually, and maybe that goes really well, or you finish paying off that and then you go with another one. But with this option, you could actually even go into 2.
Yeah, I do. And I think just run the numbers. As long as you can rent it for your mortgage payment or more, absolutely. And try with your first one, see how it feels. And if you feel comfortable with it and you can rent it out, then like the investment properties I own, sometimes I forget I even own them. They just pay themselves. It's nice. You just get a check and it pays the mortgage off. Now, you're going to remember you have an investment property when you have to do some work to it, when they call you on a work order. Those are not pleasant calls, but,
part of the package.
It's part of the package, yeah.
Yeah, Irem, what a great call, and I love your situation that you have paid off your house, your current home, so it sounds like you're really careful with your money. You have what sounds like a great credit score. I think in a lot of times in these situations, it's important to have a sit down with someone like Danny and really go over all those numbers. So I would encourage you to reach out to Danny and have that conversation. But I'm about the same age, and I also have kids, and I'm having some of those same thoughts. So appreciate your call and your thoughts today.
Thank you so much. I really appreciate the call.
Yes.
For some reason, God had just put in my mind recently about, he gives 5 talents to one, he gives 2 talents to the other one, he gives 1 talent to the other. So now that we're in this situation, that scripture keeps coming to my mind, and so it's like, what do I do now? So this has helped, and maybe I need to call Danny to maybe set up an appointment or something and take my wife with me so that we can. Okay, well, I really appreciate it. Thank you very much again.
Thank you.
Thank you, Irem. Enjoy the rest of your day. And we're back with Danny Nassar, Canopy Mortgage. If you have mortgage-related questions, call in. The number's 915-779-0016. We need to take a break. Before we go into the break, I do want to remind our listeners, this is last call. On Friday, we're having an event here in El Paso. It's called Solving the World's Greatest Problems. It's hosted by KELP in cooperation with C12. C12 is a peer group of business leaders and Christian business leaders, and we're just coming together to learn how we can collaborate to, well, solve some of the world's greatest problems. I don't think we'll solve all of them on Friday, but it's good to have a first conversation and get together. So it'll be 9:00 a.m. at Podium Finish, which is Central El Paso. It's a coffee shop restaurant. We'll have a nice venue there. It's at 1400 Texas Avenue. This is last call. So if you want to come, please contact me through the KELPradio.com website and let me know you'll be there. I'll get in touch. We'll work out the details. But we are excited because there's a good group of business leaders that are going to be there, a good group of nonprofit leaders and pastors. So just love this community collaboration to look to, again, solve some of the world's greatest problems, things like hunger, even getting the Bible translated into all languages. We'll have those who are working with solving hunger problems in our community, homelessness, and so on. So, again, solving the world's greatest problems this Friday. It'll be at Podium Finish on Texas Avenue at 9 a.m. We'll be done in about 2.5 hours. So, again, thank you to all of you who registered. We do have a good group, but this is kind of last call. Reach out to me through KELPradio.com, and we'll get your seat there. You don't have to be a business person. You don't have to be a pastor to be there, or even involved with a nonprofit. Maybe you're just interested in how you can serve our community better. So I'm looking forward to it. And down the road with this, we're looking to create more events where we get people together in real life outside of Radio World. We love Radio World, of course, but it's important for us to see each other face to face and learn from each other. So thank you for that. We're going to go into a break. We'll be back with Danny Nassar. Any mortgage related questions, just give us a call, 915-779-0016. Do not touch that dial.
We'll be right back. Don't touch that dial.
Tiffany, I have to ask you something. What's your problem?
Well, that is a loaded question, but honestly, that's exactly what this event is all about.
It really is. On Friday, May 8th, KELP and C12 Borderplex are hosting a simulcast watch party right here in El Paso called Solving the World's Greatest Problems.
It's a morning gathering at Podium Finish from 9 a.m. to noon, and we're bringing together nonprofit leaders, givers, entrepreneurs, people who care about changing things and want to find out where they fit in.
Yeah, you'll hear from people like Tim Tebow, David Platt, people who took real problems and refused to walk away.
The question the whole conference asks is a simple one. What problem are you uniquely positioned to solve? And what if we came together as a community to solve our greatest problems here in the borderland?
We'd love for you to join us. Space is limited, so register today. To register, you can just go to KELPradio.com and look for the giant Solving the World's Greatest Problems link right at the top of the page.
Come find your people, El Paso.
Again, KELPradio.com, and look for that Solving the World's Greatest Problems.
Weekday at 5 p.m. right here on this station. Calvary Chapel Sun City is located at 960 West Borderland Road on the west side of El Paso. We hold services on Wednesday evenings at 7 and on Sunday mornings at 9 and 11. If you are without a church home, we would love to have you join us for worship and Bible study. You can find out more information about us on the web at www.ccsuncity.org.
We're back. You're listening to 915 Talk.
We are back, and you are listening to 915 Talk. I'm your host, Andy Frecka. Today on this May 6th, year of our Lord 2026, we're live. We're with Danny Nassar of Canopy Mortgage. Phone lines are open, 915-779-0016 for any mortgage-related questions. We'll do our best, right, Danny?
Yes, we will.
But before we went into the break, we got a call from Iram. He was talking about how, and again, hats off to him. You know, he's paid off his house. He has two teenage sons, I believe he said, and he's looking at how to invest for them. And during the break, you mentioned another thought you might have for him.
Yes. So we're talking about the tax credit one?
No, it's co-signing.
Oh, co-signing. So when your kids become of age, which is 18 years and older, adults, I in school.
Mm-hmm.
So they essentially bought a quote unquote second home / investment property under the terms of a primary residence. So the terms of a primary residence are the lowest interest rate you can get at the lowest down payment. The terms of a second home and an investment property are at 10% down, 20% down at a higher interest rate.
Mm-hmm.
So if you could get into a home as a primary residence, you're going to get the most favorable terms. So what they did is their kids are in college, so they're of age. They went on the loan with the parents. And because the kids are living in the house, we qualified them as a primary residence.
Mm-hmm.
The kids don't have any income. They don't work, which they don't have to, because the parents co-signed for the kids and qualified them strictly off of the parents' income. So even though they don't have a job or any income, they can still qualify as a primary residence using mom and dad's money.
Okay, so that's pretty cool. I just want to make sure I understand a very important part of this. So I have one son in college in Abilene. I have another son who's planning to go to Abilene for college. What I could do is basically a similar situation to what you're saying. And probably as a caveat, I do want to underline the fact that, well, maybe ask you can do these mortgages anywhere or just in the state of Texas or...
So anywhere.
Anywhere.
Yes.
In America.
Anywhere in America.
Yeah.
Anywhere in the States. So
Okay.
so your kid's in Abilene.
Right.
You know, typically when you're in college, you have roommates.
Right.
So if you bought a house for your kid in Abilene,
Mm-hmm.
your kid goes on the loan with you, qualifies off of your income.
Right.
He can bring in roommates.
Yeah.
The roommates will pay your mortgage for you.
Right. Okay. That's great. I just want to make sure, maybe the most important thing, it's my kid's house.
It's your kid's house and your house too. It's
Okay.
both of your houses.
Oh, okay.
Yes.
All right. Yeah.
So he has to go on the loan with you,
Mm-hmm.
and then you would be a co-signer. Not necessarily a co-signer. You would be a borrower. You would be what's called a non-occupying borrower because you're not going to occupy the house.
Okay. And I guess kind of the beauty of this is it's kind of a good conditions of the mortgage because it's the primary residence of your child.
Yes.
Your adult child.
Yeah. Yes, and you're able to buy that home at incredible terms. So let's say you did it as a primary residence, right?
Okay.
You can get probably a 5.875% rate, and you only have to put 3.5% down.
Okay.
If you did it the other way as an investment property, you'd have to put 20% down, and your rate would probably be a 6.875, 6.5%.
Okay.
So your rate's going to be a full point higher, and you have to put 20% down as investment.
Right. Okay. So the option you were mentioning to Iram, it's this SD.
The DSCR.
DSCR. Right.
Mm-hmm.
So
Yes.
you do need 20% down on that?
Right.
Okay. So you need 20% down, but you don't have to prove income. That's kind of the plus side
Right.
on that. You just have to prove somehow that the rental income will be a significant percentage of the payment each month.
Correct. Now, when his kids, they're 13 and 14, from what I remember.
Yes.
So if they are 18, say they want to go to UTEP.
Yeah.
Or they want to go to Austin or wherever it may be.
Mhm.
Or they want to go to San Diego. It doesn't matter where they're at.
Sure.
He can buy a home for them if they go on the loan with him using primary residence terms, as long as his income and he qualifies for the full mortgage payment.
Mm-hmm. All right. No, that's pretty cool. Okay.
Yeah.
So, and it's good to understand all these nuances, because, again, as we mentioned earlier, even if it's a small amount every month, or what might seem like a small amount over 30 years, that's a lot of money.
It is. It is.
So do those calculations and sit down with someone like Danny who will really dig into it and drill into it with you.
Or be like Kathy and pay it off in 7 years.
Right.
Yeah.
That's right. That's right. All right. So earlier you mentioned this tax credit, which we only have a couple minutes left. Give just the Reader's Digest snapshot of that.
It's the best way to buy a house at the lowest interest rate. So there's something called a blended rate or blended interest that you pay per year. So if it's 6.25%, let's say that's what your rate is. Take off 15% of that. Do you have the calculators?
Okay.
So 6.25% times 0.85.
6.25%.
Or the number is 6.25.
0.0625.
Or no, just do 6.25.
Okay.
Times 0.85.
Times 0.85. Okay.
What does that give us? 5.3. So, you go to Best Buy, you buy a TV.
Uh-huh.
I don't know if they still have the mail-in rebates.
I don't know.
It was back. So you buy a TV, you have a mail-in rebate. They
Right.
send you money back after you buy a TV. This is kind of what this is. This is like a mail-in rebate from the IRS every year.
Mm-hmm.
They're going to give you money back equivalent to 15% of the interest you pay. So your blended rate after the rebate, it's like you're actually paying 5.3%.
Oh, wow.
So you're paying 6.25 throughout the year, but after you get that money back, essentially it's like you paid 5.3%.
Wow. Okay, that's super cool. Danny, it feels like there's so much more we could have talked about, but this hour has flown by. I appreciate the calls that came in. Danny's with Canopy Mortgage. The number is 915-221-1580. And for those who heard Patrick Tuttle when he came on, your office is there with the Coldwell Heritage banker, right?
Coldwell Banker Heritage.
Coldwell Banker Heritage. I was like, I'm getting this wrong. Coldwell Banker Heritage. You're in the same office there on El Paso's west side. But again, 915-221-1580. Danny, we have 30 seconds left.
One last note. There's a lot of self-employed borrowers and business owners in El Paso, construction workers, everything.
Mm.
You do not need to have 2 years self-employment income to buy a house. That's a huge misconception.
Okay.
Only 1 year. I can help you with just 1 year of being self-employed.
Mm-hmm. Okay.
1 year on tax returns.
That's huge.
Yes.
All right. Well, Danny, thanks again for coming in today. Truly enjoyed this
Thank you for
conversation.
having me.
Yes.
Thank you.
As we always say, let's learn to love our city, love our neighbors, and give God all the glory. This has been 915 Talk. You have been listening to 915 Talk, a production of Desert Voice Media. To listen to this or any previous edition of 915 Talk, just visit desertvoice.media and click on the 915 Talk link. Let's continue to learn to love our city, love our neighbors, and give God all the glory.
Hi, I'm Johnny Erkson Tata. Does weakness discount you for leadership? In the past, I thought so. While still in high school, I was involved in many leadership roles, captain of girls lacrosse, on the student council. Back then, leadership was a matter of persuasion and power and influence. Then,